Hey everyone, welcome back to the Investor for Life channel. Today I'm diving into a topic that's especially interesting for income-focused investors. I'll be discussing 5 dividend exchange-traded funds or ETFs that can provide you with a steady stream of income. If you're looking for investments that can help you grow your wealth over time while receiving regular payouts, then you're in the right place. I will not be focusing on any Yield Max or Defiance ETFs, as I wanted to try to give you something else to think about, maybe something new. If you're new to the channel, please consider hitting that subscribe button, give this video a thumbs up, and hit that notification bell so you never miss any new content. Today's video is going to have some ETFs you may have never seen before, may have never even heard of them before, so make sure you stick around until the end. Let's get started. Alright, so first let's clarify what a dividend ETF is. These are investment funds that hold a diversified portfolio of dividend-paying stocks, making them a great choice for income-seeking investors. They offer a convenient way to access a broad range of dividend stocks without the need for individual stock picking. Essentially, these ETFs are good for the new investor as well as the seasoned investor. It eliminates the need to have to dive in and really dissect individual companies to find out if it's something you really want to invest in or not, whereas the ETF covers such a broad range of the companies you probably would have been looking at in the first place. So they offer you an opportunity to basically own fractional shares in each of those companies, all in one lump sum. But I will not be going over ETFs in depth. I just wanted to cover what the basics of what an ETF is. The first dividend ETF pick is the Vanguard Dividend Appreciation ETF, ticker symbol VIG. This ETF focuses on U.S. stocks with a history of increasing dividends. It's like investing in companies committed to sharing their profits with you. These companies are often considered more financially stable and capable of generating consistent cash flow. The ETF can be appealing to investors looking for a combination of current income and the potential for future income growth. VIG typically holds a diversified portfolio of stocks from different sectors, including consumer discretionary, industrials, technology, healthcare, and more. This diversification helps spread the risk across various areas of the market. While the primary focus of VIG is on dividend growth rather than dividend yield, it can still provide a competitive yield compared to the broader market. The yield is driven by the dividend payments from the underlying stocks in the fund. As with all Vanguard funds, VIG is known for having a relatively low expense ratio. This means that a smaller percentage of your investment is used to cover the fund's operating costs, leaving you more of your investment to grow over time. VIG is up 0.079% year to date, so it looks to be sustainable even through a down market. Next up, we have the iShares Select Dividend ETF, ticker symbol DVY. This ETF targets high-yield dividend stocks in the U.S. market. It's a great option if you're looking for consistent income. The iShares Select Dividend ETF aims to track the performance of the Dow Jones U.S. Select Dividend Index. This index is composed of high dividend yield U.S. equities, primarily from companies that have a consistent history of paying dividends. The fund primarily invests in companies with a strong track record of paying dividends. These are often referred to as dividend aristocrats or dividend champions. The focus is on providing a source of income for investors. DVY offers diversification within the dividend space. It typically holds a wide range of stocks from various sectors, including financials, utilities, consumer goods, industrials, and more. This diversification can help reduce risk compared to investing in individual dividend-paying stocks. DVY is currently down 13.37% year to date. Our third pick is the SPDR S&P Dividend ETF, ticker symbol SDY. This ETF tracks the S&P High Yield Dividend Aristocrats Index, which includes companies with a strong track record of dividend increases. It's a fantastic choice for investors seeking stability. The SPDR S&P Dividend ETF seeks to replicate the performance of the S&P High Yield Dividend Aristocrat Index, which is companies that have historically and consistently increased their dividends for a period of 25 years or more. It's designed to provide investors with exposure to the U.S. stocks with strong and reliable dividend growth. So this can be attractive to investors seeking steady income and a history of financial stability. SDY offers diversification across sectors by including companies from various industries. This diversification can help reduce risk compared to investing in individual stocks. While SDY's primary focus is on dividend growth, it typically offers a competitive yield compared to the broader market index. The yield is driven by dividend payments from the underlying stocks in the fund. And as with many ETFs, SDY is known for having a relatively low expense ratio, which can be appealing to investors since it minimizes the impact of fees on returns. SDY is currently down 11.07% year to date. Our fourth pick is for those of you interested in international exposure. The iShares International Select Dividend ETF, ticker symbol IDV, might be the way to go. It focuses on high-yield international stocks, allowing you to diversify your dividend income globally. The iShares International Select Dividend ETF seeks to track the performance of the Dow Jones EPAC Select Dividend Index. This index includes companies from developed markets outside the United States, such as Europe, Asia, and Australia, with a strong history of paying dividends. IDV primarily invests in dividend-paying stocks from international markets, making it a valuable option for investors looking to diversify their portfolios globally. It allows investors to access companies in other developed economies with a tradition of dividend payments. As the fund focuses on high-yield international stocks, it typically offers a competitive dividend yield. The yield is a reflection of the dividend payments from the underlying international stocks within the ETF. Similar to many iShares ETFs, IDV is known for its relatively low expense ratio, which is attractive to investors as it keeps management costs low. IDV is currently down 9.8% year to date. Last but not least, we have the Invesco KBW High Dividend Yield Financial ETF, ticker symbol KBWD. This ETF is unique because it focuses specifically on high-yield dividend stocks within the financial sector. It can be a great addition to your dividend portfolio. The Invesco KBW High Dividend Yield Financial ETF aims to track the performance of the KBW Nasdaq Financial Sector Dividend Yield Index. This index is composed of high dividend yield stocks within the financial sector, including banks, insurance companies, real estate investment trusts, or REITs, and other financial institutions. KBWD is sector-specific, concentrating its investments only in the financial sector. This means it provides exposure to companies engaged in various financial services, making it an ideal choice for investors interested in this sector or seeking high dividend yields within it. As the name suggests, KBWD focuses on high dividend yield stocks. These are companies that typically distribute a significant portion of their earnings to shareholders in the form of dividends. As a result, the ETF usually offers a notably high dividend yield. The expense ratio for KBWD is an important consideration for investors. Lower expenses are generally preferable because they can have less impact on the fund's returns. Before you make any decision, consider these important factors: the ETF's expense ratio, the yield, the dividend growth history, and your investment goals. Each of these ETFs has its own characteristics, so make sure it aligns with your financial strategy. And there you have it, 5 dividend ETFs for steady income. Remember, when investing in ETFs, do your own research and consult with a financial advisor if needed. These ETFs can be a great way to build a passive income stream while enjoying the benefits of diversification. If you found this video helpful, please give it a thumbs up, subscribe to the Investor for Life channel, and hit that notification bell so you never miss any new content. And don't forget to follow me on social media. Thanks for watching, and as always, happy investing.